All right, so welcome everybody. Not sure who is joining yet, if anybody is joining, but welcome to our live first time homebuyer session. You guys have seen both Lucas and myself promoting this first time homebuyer seminar for the last couple of days, and we're just so excited to have you join us. There's going to be a lot of information that we'll be sharing as far as first time home buying is concerned, or just home buying in general. And we're excited to have you guys join us and ask your questions. I was just telling Lucas that my family popped in on me, surprisingly. They came from Georgia. They were supposed to come tomorrow, but they came today, and it completely threw my day off. But I'm happy that they're here. I'm excited to spend some time with them. So, I'm gonna be doing that after we're done with this session here today. So, not seen anybody joining us just yet, but just to introduce my friend to you. He's Lucas. I'm not gonna mispronounce his last name. I let him pronounce it for you because I can't pronounce it. I'm gonna mispronounce it. But Lucas is a lender, mortgage broker, and he is phenomenal as far as the lending process is concerned. He has a wide array of information to share. He's very knowledgeable about just any aspect of the mortgage business, and I'm very happy and honored that he has decided to join us today for this first time homebuyer seminar. So if you're here watching us live, please leave me a hashtag live, and if you're watching later on, please feel free to leave us a hashtag replay. We are going to be opening up for questions later on, so stick around. Hi, Renard. We're going to be sticking around to, answer as many questions as we can for you guys, and we'll have Lucas's information at the end of the presentation as well, so you can reach out to him as well. So, Lucas, do you want to introduce yourself really quickly?
Yeah, sure. So yeah, first off, I really appreciate being here, Sharika. So it's always nice to work together and get to do stuff like this and provide information and pretty much like some guidance on this topic. So yeah,
Mhm.
my name is Lucas Failase. That's how I pronounce it. I'm a branch manager for U Mortgage down in Hollywood, Florida. So born and raised in Broward, come from a Brazilian family. And so first generation American and been in the business since 2015. Live in Hollywood now. I used to live in Miramar and Pembroke Pines before that. And yeah, just excited to get right into it.
Awesome. Okay, well, thank you so much, Lucas. I told you guys I was gonna mispronounce his last name. He told me what it was yesterday, and I'm like, okay, yeah, we'll see. All right, so I'm just gonna go really brief about the home buying process in general, just to talk about what to expect when you're buying a home as a realtor for me, and then I will pass it over to Lucas, who will talk more about the buying process from the mortgage perspective, and that's the meat of the matter for this presentation because we want you guys to get so much information. So again, if you're watching us live, leave us a hashtag live, and later on leave us a hashtag replay. So if you've thought about buying a home, it's a major deal, I would say. It's probably the biggest deal, the biggest purchase you will ever make in your lifetime. So congratulations on that journey. It is an exciting journey, and for me as a realtor, my job is to make sure that you are comfortable as you can be in the process. It's a rewarding process, and we want to make sure that you are at the end of the process feeling happy and you're content when you push that key in that keyhole and you turn that lock. You say, yes, I am home. This presentation, we're hoping, will give you the opportunity to make more informed decisions as far as home ownership is concerned. So the first steps that you will consider when you're buying a home is understanding what your finances are. You need to have an idea of just how much your income is, what your expenses are, and your existing debts. Because Lucas will tell you that one of the very first questions he will ask you is, what is your income and how much money do you owe? Because these are questions that they need to understand so that they can help you to understand how much money you can afford to borrow from them. And then you can also figure out how much you can afford to do for a down payment. Now, down payment is extremely, extremely important. And again, Lucas can talk to you guys about some of the down payment assistance programs that are there to assist you. But if you're not looking to use down payment assistance, you want to focus on saving your money. And if you follow me, you will see that I have done different videos on suggestions about how to save for a down payment. I'll do more videos on that, so check me out on all my social media platforms, so you can see just how creative you can be as far as saving for a down payment. You want to also make sure that you are factoring additional costs as far as your closing costs are concerned, because these are some fees that sometimes surprise people, because all they think is they just need to have the down payment and the loan. They don't necessarily factor in the closing cost and all the fees that are a part of that process. And so they are surprised. They're like, wait, what? I have to pay all this money? So you want to make sure that you understand that process as well. Then you want to go through the pre-approval process, and that's where you will contact Lucas. So the first part is you figuring out, how much you can afford. You contact a mortgage broker, or you can contact me first, whichever one. And then the mortgage broker will go with you and sit with you and talk about, like I said, your expenses, your income, your debt, and figure out what mortgage option best suits you. All right. Then you want to hire a real estate agent. And when we say hire a real estate agent, you're not paying me, because if you are using me as a buyer's agent, you don't ever pay me anything as far as commission is concerned. That is for the seller. So don't focus too much on the word hiring. I want to say maybe speak to a real estate agent, speak to Sharika. And you want to work with someone who is qualified in the real estate business. You want to work with someone who understands your preferences and the local market. I can't stress that enough, because there are real estate agents are a dime a dozen out there. But you want to work with someone who is understanding, someone who knows the market, someone who's not just going to, someone who's not going to just throw anything at you and tell you, pick this, choose this, do that. But someone who knows your family situation, knows your needs, why you want to purchase a home, and just make sure that they give you the best option, the most suitable option, and negotiate on your behalf. Because at the end of the day, you want to make sure that this person has your best interest at heart, and they can also, see where you're coming from and work with you to make sure that at the end of the day, you're satisfied with your purchase. Okay. And then we get to the exciting part. For me, that is the most exciting part of this process is a home search. I like looking at pretty houses. I like looking at houses in general. So after you've gone through the process of speaking to Lucas and determining just how much money you can afford to borrow, then the next step in the process is for us to go shopping, right? Who doesn't like going shopping? I know I like going shopping. So then you're going to want to, have me search the area or areas that you're interested in and provide you with a list of different options that are there. Now, you may want a single family home in Miramar. Lucas tells you that you can afford $800,000. And I'm like, yes, that's a very good budget. Let's go. So we will create a list of properties. I'll send you a list to look at. You review that list. And then you say, okay, Sharika, I like A, B, and C. Can we make an appointment to go see those houses? Sure. Yes, we can. We'll make an appointment. We go look at the houses. You may like something, you may not like something, and we continue to look as many times as possible until you find something. Don't ever feel like you need to find the right home at the first moment you walk into the first home. It doesn't always work that way. This is not HGTV. This is real life. It doesn't always work that way. Sometimes it does, but sometimes it doesn't. So don't get deterred if you walk into the first 2-3 homes and you don't find something that you like. My philosophy is there's a home for everyone and a home and everyone for a home. So just be patient. It's a very patient. You have to be patient for this process. And I also encourage my clients to attend open houses. There are tons of open houses every weekend. I try to go to at least 2 or 3 every weekend. Again, just for me to know what's out there on the market so I can be informed and help you to make your decision. But it helps you when you can walk into an open house and you can see for yourself, what the agents are asking for, what the houses look like, what the area looks like, what the neighborhood looks like. So you can also be informed as a buyer as to what to look for when you are making, your decision about which home to choose. And then we come back to Lucas. Well, no, we don't come back to Lucas yet. We make an offer to the seller. So we're gonna do up a contract, and we will put in our contingencies. Of course, if we want to do an inspection, if you're doing a finance deal, we have to have an appraisal done because Lucas wants to make sure that the property is at the value that the neighborhood is selling for, and it's not just something that these people are saying, hey, take this house, for this price. But he wants to make sure that at the end of the day, his company is giving you a right deal, right? So we're going to be making an offer, putting in our contingencies, and have a closing date. Be prepared for negotiations because, again, this is not HGTV. They're not just going to say, yes, we will take the house, we will take your price that you're giving to us, and we'll just go towards closing. Some people would negotiate. They don't always negotiate, but just be prepared for that because it does happen. Okay. And then after they have accepted the offer, we move in towards our inspection. The home inspection after the escrow is the very first thing that you're going to be focusing on. So we usually ask for about 7 days, maybe 5 to 7 days for an inspection to be done and completed. You get back the report and you let the sellers know and so on. So you either use your own inspector or you can reach out to me. I have a list of home inspectors who I work with. They're very professional, very efficient, and they will get the results back to you on the very same day. You want to have someone who works like that because time is of the essence. As soon as the contract is executed, meaning both parties have signed, time is of the essence. There's no time to waste. There's no time to think about it again. It's now time to focus on moving towards a closing date because everybody needs to get their money, right? You need to get your home. The sellers need to get their money. And then so the inspection report will help you to identify any potential issues and help you to make an even more informed decision. So that's why you have to make sure that the inspector you're using is proficient, efficient, knowledgeable, and someone who will make sure that they will get the inspection report done in a timely manner so that the sellers can hear what you have to say, because that's when you can decide if you want to move forward with the home and get your escrow, move forward with the home or not. If you decide not to move forward, then that is the time that you can get your escrow back. If not, then you run into a whole lot of different issues. So you need to work with professionals who understand the process and are willing to help you move forward. So the appraisal is where Lucas will come in, appraisal and final loan offer. Of course, they'll be involved before because, once the contract is executed, then they also need to know, and that's, on the back end stuff. So you don't need to focus much on that. Just know that this is how it works. I will have to send the contract over to Lucas and say, hey, this is where we are. This is the situation. We're going to be closing on this date. We have this type of company that we're working with. We need for you guys now to do your back end stuff. And they will request an appraisal to be done. I'm sure Lucas has appraisers who he works with, or the buyers may say, okay, I want to work with this appraiser or whatever, but the lenders typically have their own appraisers that they work with. And so the appraiser will go do an assessment of the value of the property. And again, this is where it gets a little tricky, because there are times when the appraiser will come back and say, well, the home is listed for $350, but the value is really like $300. And so the lender, I'm sure Lucas would tell you, will say to you, okay, the home is only appraised for $300. You have options. You're either going to come up with the additional $50,000, and he'll correct me if I'm wrong, but this is my understanding. You're going to come up with the extra $50,000 out of pocket, or your loan cannot be approved. Okay, so it's important to get that knowledge clear, and that's why I always encourage my buyers to talk to a lender without even going into the process of like making any commitments. Just talk to a lender so you understand, and that's when you can make your decisions, because otherwise you're just kind of walking around with just general knowledge of my cousin said this and my sister said that. And talk to the professionals so you can get the proper responses that you need. And then we come to the final process that everybody loves. After we've done the tug of war and we've done the fighting and then the back end stuff and we're stressed, we come to the final day, the closing. So my job is to coordinate with the seller's agent, to coordinate with the lender, the title company, you as the buyer, to finalize all paperwork. Once all of that is done, the title company will review all the documents and then they will say, okay, great, you are clear to close. That there's no, I don't think there are any more important words for anybody in the real estate process other than you are clear to close. When you see those words, you know, yes, I got this house. I'm going to closing. I mean, things still can happen at closing, but you know, like those are the most important words to anybody in the real estate the real estate field. And all my real estate agents were on here. I see Marilyn is on here. You can attest to that as well. Those are the most important words in the real estate business. So the title company will tell you beforehand how much you are required to pay for your closing costs and any other fees that may come up. And they will send you that closing sheet before the closing, so you come prepared either with a check or cash or whatever, you know, option they choose to tell you. They'll tell you what to come with, what to walk with, and sometimes you get money back, sometimes you don't. But you know, at the end of the day, you will sign documents. Both the sellers and the buyers will sign. You get your keys and you go home. Like, it's beautiful. It's thank you so much, Marilyn. It's beautiful and it's rewarding, and it's something that, you know, I remember talking to Jackie today, and she was telling somebody, she said, look, if I tell people, if you can buy a door, buy a door, because it is such a rewarding process. It's a lot. It takes a lot out of you, and you know, it can be a tedious process, but it's also a rewarding process for you. So, like I said, the home buying process can be complex, but with the right preparation and professional guidance, it is a rewarding journey. Take your time, ask your questions, make well-informed decisions, and let's go forth and have you enjoy your new home. My job is to take all the stress from you and to make it a stress-free process. And Lucas's job also as the mortgage person is to make it as stress-free for you as possible, so that at the end you can you know, go home and say, yeah, this was worth it. All right. So I don't know if anybody has any questions about that particular presentation. Lucas, did you have anything to add? Did I miss anything?
No, I thought it was pretty spot on. It was great.
Okay, awesome. Thank you so much. Marilyn says, I'm a pro on Facebook Live. I'm trying. Thank you so much. All right. So I'm gonna bring Lucas's presentation up, and whenever you're ready, Lucas, take it away.
All right. Thank you so much. It's going to be hard to follow that. That was pretty great. Pretty great. So, you know, thank you guys for tuning in. For those that I know, for those that I don't know, I'm really happy to be here. I know that we love talking to first-time home buyers because it's pretty much one of the most rewarding parts is when you're working with a first-time home buyer that's never experienced it before, then they finally buy a house. It's really special. It's by far the favorite part of the job. So in this presentation, we're pretty much going to cover several things. We're going to go over myths that exist overall, like where the market is, like, you know, maybe what's happening with prices, concerns that people have, and then also just general like mortgage 101 things that are good to know. And then at the end, like Sharika said, we're going to have an opportunity for questions. So, all right, we're going to go ahead and get right into it. So first is we're going to go over myths of purchasing a home. There's a lot out there, and these are some of the major ones. So, you know, you need 20% down to buy a house. That's absolutely not true. There's options for 0% down. Most commonly, there's several with 3% down. Big difference from 20% down. That's a very common one. Literally, so many people still believe that. You need to have perfect credit. Absolutely not. With an FHA loan, you can buy a home with as little as a 500 credit score, 500. So I'm not saying it's going to be easy. Obviously, the better the score, the better the loan terms, the easier process you're going to have. But you can buy a home with as little as a 500 score. So that myth of perfect credit is absolutely not true. A lot of people believe you need to have something in the 700s. So That's where that comes from. You need to be at your current job for 2 years. Also not true. There are situations where someone could be, they could be in school and then they just got their first full-time job. Let's say they were studying engineering or to be a nurse or anything, and now they got their first job. As long as you're full-time, we can use that right away. We can use your school history as work history. Also, you can be in the same line of work. So you could have just switched jobs like today, and we can use your income today. Even if you just switch jobs, as long as it's full time or as long as it's in line with what you were doing before. So there's a lot of just misconceptions in terms of like I need to be here at the same exact job for 2 years. Also not
Right.
true. You should wait for rates to drop. We're going to get into that in a little bit more in the next slides, but I definitely do not recommend that. Prices are only going up. New forecast just came out from Zillow, from Case Shiller. Home prices are expected to go up another more than 5%, especially here in the South Florida market, but more than 5% in throughout this year and going into next year. So waiting for rates to drop is something that it's in the meantime, home prices are going to keep going up. We're going to get into that in future slides. And which leads to the next one, which you should wait for home prices to come down. That's not going to happen. And I know a lot of people find that hard to believe. We're going to get into some of the reasons why in the next slides. So, we'll get into that. So now what are some fears of home ownership that people have? So some people think, well, if I'm the tenant, I don't have to pay for repairs. Yeah, that's true. I mean, you for the most part don't have to pay for repairs. So costly repairs for the most part, if you maintain your home, not really that costly. There might be some things that come up here and there, but for all the benefits that you get tax benefits, you get tax breaks, home appreciates. I mean, the list goes on and on and on and on. Financially, it's an absolute no-brainer to own a home. Uncertainty about the future. Hey, maybe I'm not going to live here for 30 years. Well, that's where you use Sharika and it's like, hey, I want to sell my home. Or you know what? I want to rent out my property. Sharika has rental property. I have rental property, and it's great. I mean, there's ups and downs with everything in life, but the financial security that you have of owning property is, I mean, you can't compare that to renting. And so
Mhm.
uncertainty about the future should not be a concern because no one's going to know where their life's going to be in 5 years. So
Right.
many things can change. So that is something that you always have options to get out of a home or whatever the case may be. Location, same thing. I might not be here forever. At the end of the day, there's a lot of options when it comes to property. You can sell it, you can rent it out. And real estate market fluctuations also. Hey, what's the market going to do? And we have a lot of strong projections on why the market is so strong, and we're going to get into that. But at the end of the day, no one's going to have a crystal ball for anything. But if in the meantime you can secure your payments, because if there's no crystal ball for renting either, if rent prices continue to go up, or your landlord all of a sudden wants to sell the house out from under you, and you have a few months to figure something out. I mean, there is uncertainty with everything. So
Right.
I think home ownership is one of those things that protects you in a lot of different ways. So what's some fake news that has come out recently? So I don't know if you guys saw, there was this thing circulating like a few months ago, the first one at the top, about like, oh, if you have high credit now, you're going to get a higher rate than someone that has low credit. Absolutely not true. That the way that was presented was so like it was just typical like fake news sort of thing. So what did happen is lower down payment options became more affordable, and if you were putting 20% down, and if your credit was less than perfect, it was slightly more expensive. Like you got a slight bump in the rate, but overall for most people, it got cheaper if you're doing a low down payment option, which is what most first time home buyers are doing. So in general, higher credit is always better. So that this thing, it was just completely thrown out of proportion. If you have high credit, keep it high. Um,
Right.
there's going to be a housing crash. Not going to happen. We're going to get into that a little bit more. Gary Vee and Grant Cardone telling you home ownership is stupid. I saw a lot of that. Um, these are guys that are billionaires, so their perspective is going to be different than our perspective on like what we need to do to secure ourselves. And home ownership just again protects you in a million different ways. Renting is absolutely not the way. We're going to get into on a future slide. It shows all the metrics and the numbers of comparing buying versus renting over the course of 9 years. So we're going to get into that one. And you can get a 40-year FHA loan. That also was just fake news that just spread like wildfire. No, you can get a 30-year FHA loan. There are certain situations where people in distressed situations where they're not being able to make their mortgage payment, they can have the mortgage modified to a 40-year loan. But that's only once you miss payments and your credit is going, down. So that's not a situation you like want to be in, But in that event, there are solutions where a lender will provide a way to reduce the payments by extending the loan term. So is it a good time to buy? So I like this graph just because it just shows like what are people's, thoughts on different forms of investment, stocks, bonds, gold, savings, and real estate by far is America's number one choice for long-term investment. If you look long-term, real estate is, I mean, it's incredible how much it's appreciated. Median home prices have gone up so much. In the 90s, the median home price was around 90,000. Now we're talking about, over 400,000 is the median home price at the moment. So long-term real estate is a great investment. So whether you think home prices are high now or not, historically speaking, home prices always go up. Whether they level out at times or whatever the case is, over time, it's one of the few things that has just continuously gone up when you look over a longer time horizon. Home prices. So I know it's a little bit small maybe for some people. So here we're at the beginning of 2023, all the way at the right of the graph. So what you see that happen is how quickly, prices went up from, 2020, 2019, 2020, and then leading into 2022. And what's happened is prices have leveled off, but with low inventory, with high demand, we have seen home prices continue to go up. Sharika will tell you that there are multiple offer situations today.
Yeah.
So if you want to go buy a home, chances are you're going to be competing against a few other people. It's just like anything. If I'm selling a pair of shoes and one person wants to buy it, they're going to be able to negotiate with me and I might, do what I need to do to sell the shoes. But if there's 10 people that want to buy my shoes and now I'm causing a bit of a bidding war, the prices are going to go up. And that's true
Yeah.
with real estate as well. So what's happened as of late, there were some recent forecasts that just came out after the end of the second quarter of the year, but home prices are expected nationwide, expected to appreciate 5% from 2023 to 2024. So that means that a $400,000 home, it should be worth 420 in 2024.
Hmm.
The cost of waiting. This one is small. This is one that if you want to see this one, DM Sharika and I will have it sent to you. This one essentially shows what happens if I wait 6 months, 12 months, 18 months to buy the same home. Even if rates come down, what is the cost like to my pocket? What's the difference? What's the cost of waiting? This one normally is on a larger screen when I do this presentation. So if you want to see this one, please just DM Sharika, send her your email address, and I will send this exact slide to you.
Yes.
Housing supply absorption rate. This is a fancy way of saying that it's a seller's market. So anytime you have a situation where there's less than 6 months worth of housing supply, meaning if no more homes go on the market and whoever is buying now ends up buying the homes that are available on the market, how long is it going to be before we run out of available homes? That's essentially what this is. And we're at about 2 months, 2.5 months. It's been this way for a while. And that means it's a seller's market, which is why prices are not going to come down. You can't, in basic economics, if there's more people that want to buy than there are the thing available, whether it's water, corn, houses, prices are going to go up.
Right.
Buy versus rent. I really like this slide. We're going to spend a little bit of time on this one. This one is a great representation of buying versus renting, which is a big question a lot of people have. Lucas, prices are high. Sharika, prices are high. Interest rates are high. Why don't I just wait and rent? So we're going to go over, I'm going to point out some of the major things. So if you look at the top left corner, so buying year one, then you see renting year one, renting year 9. So this is going to be a 9-year comparison over the two. So buying year one, if you look on the like fourth line down, it says monthly expense is $2,615. So this is an example of a $400,000 home. And so with the principal and interest, taxes, insurance, how much should I be, about how much am I going to be spending per month? So let's say $2,600 is your mortgage payment. Renting year one, which you're going to see on the next column over, is going to be about $2,400. So, someone can say, hey, you know what, Lucas, I'm going to be saving if I rent $200 a month. Why don't I just rent? And, if you're looking at it from that short of a time horizon, like, okay, but that's not the reality. The reality is if you're renting, now you might continue to rent and what's going to happen over time. So over time, if you factor in an annual rent increase of 6% a year, which is relatively average, it's a little bit above inflation, cost of living, taxes go up, landlords are going to increase rent. So 6% is the average. So by the end of year 9, we're talking about a major increase on how much you're going to be paying for rent. So we're talking about nearly $4,000. So a huge, huge increase on how much you're going to be spending as far as cash flow. So if you look at the bar graph on the right, it kind of shows it in like nice colors, but white is the mortgage. You see it stays steady, and green is the rent. And you see how much that increases over time. So actually the monthly cash flow difference. So if you notice year 1, if you look at the bar graph, mortgage is more than the rent. Year 2, it's about even. Year 3, rent starts to be more, and then it goes more and more and more from there. The cash flow difference on a $400,000 home is $58,926 over 9 years. We're talking about cash out of your pocket. We're not even talking about appreciation, how much the property has gone up in value, or amortization gain, which means you paying down your mortgage balance. We're talking about literally just cash out of your pocket. $60,000 pretty much over 9 years. Because the thing is, sometimes people look at it on the short term, but long term, a mortgage is a great way to secure your housing expense. Then the other benefits, which is huge, is appreciation gain. So if you factor in just average appreciation of a little over 4% a year, so here it's using a forecasted appreciation of 4.44%. So it means after 9 years, that $400,000 home is going to be worth $591. You're talking about nearly $200,000. I mean, if you're working an average job, right, you're making $60,000 a year, 50. I think median income in South Florida is like $45,000 a year. I mean, you're talking about a way to potentially make nearly $200,000 in a decade. On top of your salary, on top of whatever else that you're doing as far as income, this is a whole other form of income. It's an investment. And then amortization gain on the right, that essentially is where you're paying down your mortgage balance over time. So when you're paying rent, right, it's going not to you, it's going to the landlord. When you're paying your mortgage down, even though dollar wise it might be similar at first, you're actually paying yourself. If your money goes from your right pocket to your left pocket, right pocket is your checking account, left pocket is your mortgage balance, you're still paying yourself.
Mm-hmm.
So that means you've paid yourself about $40,000 over the course of 9 years. So all this, we're talking about cash flow difference of nearly 60,000, amortization gained of nearly 40,000, and another 191,000 in appreciation gained. The total difference, you're talking about just about $300,000 over 9 years. So that's really the power of home ownership. I love this slide, and that's why I wanted to take so much time on this one. Now, what's going on in our market? We kind of touched on this one, so I'm going to go past this one pretty quick, but it's a seller's market. Remember, we talked about the housing supply. If it's less than 6 months, seller's market. Neutral is 6 to 7. Buyer's market is if there's more than 7. And if there's less than 6 months, it means home prices will appreciate because there's just not enough houses available. Pre-qualification versus pre-approval. This is just a technical definition thing. We're not going to spend a lot of time on this one. But what Sharika was talking about before was a pre-approval, which is what we do. That's the one on the right. Which is where you want to get a home, you want to get a mortgage, we're going to talk, you're going to submit documents, we're going to do a credit check, and then we're going to be able to tell you exactly about how much you can buy, and we can go over loan terms and that sort of thing. And it kind of just breaks down a bit of the process of what we do. The top line is the main one that I would focus on, the first bullet point, which is we collect documents to verify your income, your assets, and your credit. And then the one on the left, pre-qualification, is more like informal. If someone's just talking to me and say, hey, Lucas, I want to buy maybe a year from now. I just want to kind of get an idea. I could find out pretty quickly. You tell me your credit score, about how much you pay in debt, about how much your income is. I can give you an idea of about how much you should be able to buy. It's not very useful in like the real world, but it will give you an idea of kind of where you're at. If you're going to go, actually house shopping, and you and Sharika are going to be going to open houses and seeing properties, you're going to need the one on the right, which is a pre-approval, because no seller is going to take you seriously with a pre-qualification. They're going to need to see the actual, where it says pre-approval letter. That's the industry standard for this sort of thing. Now, where can I get my down payment? That's a common part of it is like, I'm going to need to come up with money at closing. So there's a few different ways. A lot of these are ones that people don't know. A lot of people think it needs to be in my checkings and savings. That's definitely one way, but here's a few others. So savings, obviously, 401k. A lot of people don't know that you can use your 401k from your job for the purchase of your first home, and they won't penalize you. It's something that not a lot of people know, and a lot of people will have had their employers match their 401k. As long as you've been at your job long enough and your 401k has been vested, that's the terminology that's used, is vested. That means that that money is now available. So even if your employer matches like 1 to 1 or up to a certain percentage or whatever, if you've been at your job, sometimes it's like 3 years, 4 years, 5 years. Every company is different. You can actually use even the money that your employer contributed to your 401k for the purchase of your first home. So you can use your 401k, and a lot of people have a 401k because they've been working for years, and there's the money right there for your down payment. You can use stocks. You can use gift money. We're going to talk about gifts a little more later, but your family or close, they could be a fiance, cousins, parents, grandparents, aunt, uncle, whatever. They can gift money towards your closing. I see it more commonly with like grandparents to kids, or parents to their kids. There's down
Mhm.
payment assistance programs, and I want to touch on that one really briefly. So there's a very common one and popular one right now that we do very often, which is called Hometown Heroes. And that is where you are receiving a 5% assistance, which will cover your full down payment and half of your closing costs pretty much. And all that you need for that is a 640 credit score, and you need to be working full time. You can be self-employed here in the state of Florida. The business has to be based out of Florida, but you can be self-employed or employed working at least 35 hours per week, 640 credit score, and be a first-time home buyer. Unless you served in the military, you do not need to be a first-time home buyer. You can use it even if you've bought a property before. And then last one is equity from a property you're selling. This is more geared towards first-time home buyers, so it might not apply to you. But if you did have a property and you were selling it, you can use that net proceeds to buy the new property. What does it take to qualify? It's pretty much income and assets. So, pay stubs, W-2s, tax returns, and bank statements. What's the best type of loan for me? That is something that I will be able to help with. There's so many different situations. I just want to touch on a couple ones. Conventional, the one at the top, is one of the more common ones. First time home buyer, you can buy with 3% down. FHA is another great one, 3.5% down. If you served in the military, 0% down, as that's one of your benefits for your service. I want to jump to the USDA is not very common here in South Florida. That is more in like rural agricultural areas. But if you do qualify, if the home that you're buying qualifies for USDA, you might qualify for USDA, and that is also 0% down. Non-QM is one I want to touch on really quickly. If you are a self-employed person, because there might be self-employed people watching this right now,
Mhm.
that say, you know what, I want to buy a house, but my tax returns, I don't really show a lot of money because I don't want to pay a lot to the IRS. It's very common. There are loan programs such as bank statement programs, which is what we call them, where we qualify the income using the deposits of your bank statement. It could be cash deposits, it could be Zelle, could be, if you run I don't know, you run a store, a regular convenience store. It could be the deposits from that, just regular cash deposits or whatever, credit cards, whatever it is. And we can use that, and that requires a minimum of a 10% down payment, but we don't use your tax returns at all. So you could claim $0 in income to the IRS. And as long as we can qualify you from the deposits on your bank statement, you will qualify for a home. Here's some major bullet points on the differences between the top three loan programs in terms of like common, like what is the most common, FHA, conventional, and VA. Not going to spend a lot of time on this one. This is what I will be able to help with when we're doing the application process. But pretty much FHA is more lenient on some things in terms of credit score and in terms of debt to income ratio. That means how much debt you have relative to what your income is. Conventional is a little bit stricter, but you can go higher on the purchase price. And then VA on the right is, I mean, if you're a veteran, you need to be using your VA loan. VA is by far the best loan program for the veteran, for the service man or woman. So if you are a veteran, we'll pretty much almost guaranteed we're going to go that route unless there's a reason we have to go one of the other ones. Yeah, let's talk credit score. So, I mean, this one's pretty straightforward for most people. Credit is what lenders use to determine how reliable you are in terms of making your payments. So, some major things, is you want to just, if you're going to be looking into buying a home, someone like myself or a credit repair person can make recommendations to increase your score if that's a concern that you have well before the time of like you buying a home. Major things, you want to have your credit card balances as low as possible. You want to make your payments on time, and you want to avoid running your credit too much. Those are the major things. Keep your credit card balances down. Don't, run your credit too much, and make your payments on time. Now, if you don't have credit, it's recommended get a credit card or two. Don't go to a store, like don't go to Macy's or like Victoria's Secret and open a credit card. A lot of people do that, but go to your bank. A lot of them will have options, like if you don't have credit at all, to get a secure credit card. And if you have more questions on that, you can reach out to me or Sharika. I want to keep the presentation on time. So, but credit, those are my recommendations on that. Can I use gift money? Yes, we touched on that briefly before. We need to identify who the donor is. You guys are going to have a gift letter between the two. We have a letter, we have a template, but pretty much it's going to say, I, Lucas, am gifting my son $10,000 towards the purchase of their first home. And then I do the transfer, and that's that. What is mortgage insurance? We're not going to spend a lot of time on this one. Pretty much the main thing you need to know, if you're putting less than 20% down, there is an additional insurance that you pay to the lender. And on some loan programs, once you hit the point of having 20% equity, meaning you owe 80% or less of what the home is worth, that mortgage insurance, that insurance that you pay to the lender, falls off. On some loan programs, it doesn't. So we'll go over that whenever the time comes for you. What are closing costs? So closing costs is one of the things that you bring to closing. One is the down payment, which we already discussed, 3% down minimum for most loan programs. The other is closing costs. It's fees and other things that you pay at closing. So here's a few of the major things to know about it. So all loans are going to have closing costs. We're required to give you a detailed breakdown of what those fees are. Those closing costs can be paid by you as the buyer, the seller, or a combination of the two. Then closing costs can also be gifted. That's part of the gift as well. The gift can cover down payment, can also cover closing costs. And a breakdown of some of the costs are in the top paragraph. And these are things that will go towards the fees for the lender, fees for the attorney or the title company, things such as title insurance. That is an insurance that protects the title of the property, that goes towards the title company. And that's an insurance for the lender and for you. Property taxes, also upfront things like the first year of insurance. So when you buy a car or when you buy a home, like if you ever bought a car, you drove it off the lot, they require you to get insurance before you drive that car away. Same thing for a house. When you're going to buy a house, you need to pay for the first year of insurance right there at closing. So if that insurance is $2,000 a year, one of the things you pay at closing is $2,000 for the first 12 months of insurance. And those are some of the categories of closing costs. What happens when I'm under contract? Sharika went over this in her presentation, so I'm going to skip this part of it. What are your responsibilities? Things that you should do is keep everything the same. And if you don't know what to do, that middle one is the one that I really want you to be aware of. If you're not sure, ask me and I can tell you. If you're not sure if you should run your credit, ask me. If you're not sure if you should transfer this money, ask me. If you're not sure if you should take that new job, ask me. Because some of them are a problem, some of them are not. Some of them you might be overthinking is an issue and it's actually not. And some of them you might think is no big deal, like transferring money from one account to another. But it's actually kind of a pain in the butt, to be honest. So you don't really want to be transferring money unless like you really have to, and I'll tell you how to do it. Now let's explore what not to do. What do you not want to do? You don't want to change jobs, become self-employed, or just quit your job unless it really makes sense. If you tell me, hey, Lucas, I got a job offer, I'm going to start right away, and they're giving me a 10% raise, 20% raise, and it's full time, I'm going to tell you, let's do it. And that's one of the things you want to ask me about, but don't just arbitrarily do one of these things, like go from W-2, be your W-2 employee to how you want to start your own business in the middle of the process. Don't acquire new debt. Don't use your credit cards excessively. Don't change bank accounts, and don't co-sign for somebody else on a loan while you're buying a house. After you buy the house, knock yourself out, do whatever you want. But these are things that you don't want to do. Benefits of homeownership, we already touched on this. I'm going to wrap it up as my time here is winding down. You have fixed monthly payments, built-in savings because you have that equity. Remember, $191,000 over the course of 9 years. Net worth for a homeowner, it's statistically proven, is 40 times greater than that of a renter. 40 times the benefits of homeownership. Safe place for you and your family. Obviously, no one's going to kick you out. The National Association of Realtors says that $198,000 is the average appreciation gained in the last 10 years. So you would have made $200,000 if you bought a house 10 years ago. It's average. Equity can be used for other investments. Working with a realtor. Now, why do you want to work with a realtor? It's major, 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 major. I see people all the time sometimes think, oh, if I just don't work with a realtor, will it benefit me? First off, the seller is going to pay your realtor, so you don't pay them. But you want to have someone representing you. So, a realtor is going to represent you, the buyer, and your best interest. They are your advocate. They're going to negotiate on your behalf. They have the product knowledge. They know how to, negotiate the right things, the inspection, get you seller credit. They have the area knowledge. Is this a good area or not? Is this an area you really want to be looking into? They have the connections, the good lenders, the good title companies, contractors, and they're going to help you with a customized home search. You might think that Googling cheapest mortgage in the USA on Google is going to get you a good lender. I can assure you, a call center person in Michigan is probably not going to be looking out for you because they really don't have much skin in the game. Sharika, being a professional real estate agent, has worked with dozens of lenders. So she's going to be able to know this lender is good at this lender is good at that. This lender, speaks Spanish. This one speaks Creole, or whatever it is that you need. She's going to have the connections. I might not always be the best lender for the particular situation. She's going to know who is going to be the best one, and she's going to be unbiased in her opinion. So that's that. That's my whole presentation. This is my information. If you guys want to save it, again, you can reach out to Sharika. She'll connect you with me. But happy to help however I can. I want to leave time for the questions. So, Sharika.
Awesome. Thank you so much, Lucas. And like I said, guys, I mean, you can't get this information anywhere else today but here. I told you that Lucas was phenomenal in what he does, and he has proven just that with this presentation. I made a few notes for myself just to kind of go over some of the things we talked about, creative financing and how you can get like a gift letter for, towards the down payment and the closing costs for your home. Not many people know these things. You can get, but you just have to have the paperwork and so on. And always ask questions to Lucas or myself. I remember again, one of the first things when I first met Jackie, she said, when she talks to her buyer, she says, when you have gotten the executed contract, meaning both parties have signed, whatever credit cards you have, put it in a Ziploc and put it in your freezer because you don't have it. It doesn't exist, right? But like Lucas said, once you close, you can do whatever you want to do. Buy the car, buy the new phone, co-sign a loan for somebody else. But once you have that executed contract, you no longer have a credit card, right? Don't quit your job. Talk to Lucas before. Talk to me. Say, hey, Sharika, it's really getting a little heavy over here. I need to get out. What do I need to do? And we'll talk with Lucas together because, guys, we don't want you to get into the situation where you are in the process and almost there, and then you do something and it has happened. It has happened. People have gone to the closing table and the lender says, we can't close because we just found out that you just bought a new car. Like, people have gone to buy furniture on their credit card before closing and end up not being able to close because they just bought furniture on their credit card. These things happen. We're not just pulling these things out of thin air. They happen. And then, one of the other things that he talks about is credit repair. There are some buyers that I would talk to who will say, you know what, look, my credit is not where it needs to be right now. I'm going to wait. But you're waiting without knowledge. So talk to Lucas and say, hey, I need to buy a house. I want to buy a house in 6 months, 1 year from now. But my credit is 500. What can I do? How can I get it up? What are my options? And as he said in his presentation, he has different ideas, different people who he works with who can help you to get your credit to where it needs to be to get the best prices and the best option for you. So it's just a matter of communication. And a lot of people ask again, is now a good time to buy? My thing to tell you, my buyers, is it's a good time to buy when you're ready. It's not when the rates are low or when the prices are low, or it's whenever you're ready, because there's always going to be a situation that will, hinder somebody else or deter somebody else, but it's the right time for you, right? So don't get caught up in what's going on. You watch the news and it's telling you, oh, this, and my sister said this and my cousin said no. Talk to the people who know and get the information, and then you decide, okay? So I know there's some people on here who have been watching. I thank you guys so much for being here with us and for staying on. My mom and my aunt are saying good presentation. I think they're talking about you, Lucas. Great presentation. My mom says very impressive. My aunt says very good information, great presentation. My mom says all the best. If anybody's on here and you have any questions for Lucas or myself, now is the time that you can ask your questions. We'll be on here for a couple more minutes or a few more minutes, and we want to make sure that you get all your questions answered. So let us know if you have any questions. I hope you guys have questions. Or somebody will say, well, I guess my presentation was just that great that nobody has any questions that they want to ask. But one of the things, while you guys were thinking about your questions, that I had Lucas mentioned it in his presentation, because I was going to ask him about what are some fees that people need to consider when they're doing a loan. But he did mention that in his presentation, which I'm glad he did, because again, a lot of people are surprised that they have to pay for title insurance, or they have to pay for Kalela says, thank you both, well done. Thank you so much for being here, Kalela. Do you have any questions? Yeah, but a lot of people are surprised that they have to pay the title company for processing, or they have to pay the transaction coordinator for doing all the paperwork in the background, and these things kind of come as a surprise to them, and they're thinking, okay, where am I going to get another 10, 15, 5,000 from? So thank you so much for touching on that, Lucas, because it's an important part of the process. Can you Okay, Kalela says, how do we apply for the Hometown Heroes program?
Yeah, so the Hometown Heroes program is an application that we manage. So pretty much it would just be part of like the regular loan application. So, we have an online portal. That's how most people, they create an account and fill out the application, upload documents that way. And then if we see that, you meet those requirements, the 35 hours of work in a week, the 640 credit score, first time home buyer, then we'll tell you, hey, Hometown Heroes is an option and you can do it. So it's something that we manage, and it's very, very simple. There's no like additional application or anything that you would have to do.
Okay. And just to add to that as well, if you guys, well, some of you may or may not know, the Hometown Heroes program, when it first came out, was only catering to first responders. So anybody who worked in the medical field, firefighters, police officers, doctors, nurses, this program was first catered for them. Now, since July, it's July, right? July 1 of this year, they have opened the requirements, or the prerequisites for this particular program. So now it caters to just about anybody here in the state of Florida. Like Lucas said, you have to be working here. So even though you may be working at home or working online, your company has to be based here in Florida in order for you to qualify that. Correct me if I'm wrong, Lucas, but I think that's what it is. And you get what is it, up to 5% of the purchase price towards your down payment and closing cost, or just down payment?
It's 5%. A lot of people think it's 5% of purchase price. It's 5% of the loan amount, which is
Okay.
literally almost identical. Like if you're buying a
Mhm.
$400,000 house and you're putting 3% down, the loan amount's going to be 388. So it's like 5% of the 388 instead of 5% of the 400.
Okay.
Yeah, and there's actually one thing I want to add about Hometown Heroes is so they fund it with $100 million at a time,
Mm-hmm.
and they funded it again July 1st with another 100 million. They
Right.
are, I checked, I think it was yesterday last I checked, they're at 50 million. So they've literally gone through half in 1 month. Um,
50 million?
50 million in 1 month.
Wow.
So
In
there's probably
1 month.
literally, yeah, there's probably literally another 4 to 5 weeks of this left, honestly. Um,
Oh my God.
yeah.
Yeah. Guys, if you are watching and you want to know about the Hometown Heroes program, if you want to benefit from the Hometown Heroes program, you have to call Lucas. I deliberately left the last slide up with his contact information so that you can reach out to him today, tonight, tomorrow. Send him an email. He is very, very prompt with his response. So you send him an email today, you will hear back from him today. If you don't hear from him today, it's because, God forbid, he's tied up somewhere. But he is very, very prompt with his response. Kalila says, thank you, got you. You'll definitely be hearing from me. Oh, great. So there you go. But yeah, the Hometown Heroes program is amazing. And I would encourage just about anybody to try it out, talk to Lucas about it and get more information. I like that you talked about the fake news, because I did hear, the especially the first one about if you have a certain type of credit score, if you make a certain amount, then you'll be paying for other people or something to that effect. And I thought, like, wait, what? What are we talking about? So I'm kind of glad that you touched on that and cleared that up,
Yeah, yeah, they simplified it too much because these things are kind of complicated. That topic is called a LLPA, a loan level pricing adjustment, and these things
Hmm.
are like it's a big table, like a matrix with like a bunch of different, so like different credit scores and different down payments.
Right.
Some credit score and down payment, like, combinations got cheaper and some got
Hmm.
more expensive, but they made it sound like, oh, it just got, more expensive for everyone with good credit. And it's like,
Right.
what are you saying? Like, so the way
Right.
that it was presented was so bogus. But there's like some categories that got more expensive, some that got less expensive, but it's not like a blanket, like if you have higher credit, your rate went up, and people with lower credit, their rate went down. Like, that's backwards.
Hmm.
So
Hmm.
yeah.
Yeah, it was a big thing on social media. But it was like, oh, so I guess I'm gonna be punished for having good credit. Like, what's going on? Like, so I'm glad you touched on that. And can you also like, if anybody has any questions, again, don't be afraid to ask your questions. I'm just kind of making sure that I answer whatever questions I had. That could also help you guys. But when you talked about the school history, because again, a lot of people don't know this, that if you were in school studying and you just came out, you just got a job, you could use your school history towards your work history qualification or something to that effect. Could you like explain that a little bit more?
Yeah, absolutely. So, for example, we're doing a loan right now,
Mhm.
Hometown Heroes, for a really young couple. The guy, I mean, it's like boyfriend and girlfriend. He's 18, like it's really young, um, and his girlfriend is, I want to say she's like 21, so they're very
Wow.
very young, and she was in school up until like a year ago, and then she had a job, like a kind of part-time job in the, so she was in, I think it was like pre-med or like biology, like one of these like tracks in school. Then she
Mhm.
got like a part-time position in like a nursing, like it was like she was like a full-time nurse. I forgot the exact title, but then now she's
Right.
working as a nurse. So she has less than 2 years working, but we're using her school transcripts to kind of document, like, yeah, she hasn't been working 2 years, but she's been in this field for 2 years. And there could be even more extreme situations, like someone could have just graduated, now, spring 2023. And if they were studying
Mhm.
accounting and they got a job in an accounting firm, or some sort of legal field, and now they're working as a paralegal or whatever, as long as it makes sense, like, hey, I was studying
Yeah.
this and now I'm working in the same field, we can
Mhm.
use that history pretty easily. So we just get the transcripts showing that that's what they were studying, and then as long as someone's working full
Mhm.
time, that's the key. It can't be part time. That's the only thing. Part time
Okay.
requires a 2 year history of part time, because the thing is, I'm going to go off on a little tangent, but because part time is variable, you might work 20 hours this week, you might work 25 hours next week, you might work 15 hours the next week. So a lender doesn't have a way to like really calculate your income, like what is, this buyer's average. There's no way to really determine
Mhm.
an average until there's a really 2 year history. But full time, if someone's working 40 hours a week, or a lot of nurses work 36 hours a week, if someone's working full time and that is their regularly scheduled amount, they might work more, someone might work overtime, that's different.
Yeah.
But if someone's at least working X amount of hours, full time, then that's where we're able to use it, like right away, pretty much.
Okay, that's awesome. Again, like it just takes a little bit of conversation, guys, for just to find out what's out there, because there's just so many different options that are available to make your home, your dream of home ownership a reality. Don't just sit back and say, I don't have this. I have not been working for 2 years. Like, talk to us and find out what's going on. Kalela says, I was about to ask about employment gaps. Thank you for touching on it. Okay. Awesome. So, just talk to us and find out what's out there. If I don't know, because I promise you I don't know. If I don't know, I'm gonna call Lucas, I'm gonna call a mentor, I'm gonna find out, and we're gonna have that conversation, because it brings me great joy to see you with the keys in your hand, knowing that I was a part of that process. And I'm sure Lucas feels the same way, when he sees you taking your pictures and saying, okay, yeah, I helped to make that dream a reality. Had any questions or comments? No, there was something else that I just thought about, but I completely forgot. But yeah, if you guys have any, we're just coming up on the 1 hour mark that we said we're gonna be here from 6 to 7. If you guys have any further questions, if you watch this later on, you have any questions, I have Lucas's contact information, or you can, go to the end of this presentation, you see his contact information. Feel free to reach out to him directly and let him know that you start this presentation and you wanted to ask more questions about, anything in particular. If you want to know more about the home buying process as far as working with a realtor is concerned, feel free to reach out to me. You have my information, and I'll also post it again at the end of this presentation, so you'll have it. And let's work towards making 2023 your year for home ownership. We look forward to hearing from you guys. And again, I want to thank Lucas so much for taking the time to be here with me and to talk about the joys of home ownership. And let's do this again another time, Lucas.
No, thank you so much for having me, Sharika. It was such a pleasure. I love working with you, and just you talking to first-time home buyers. It's so rewarding. So thank you for everyone that tuned in, that took the time to get this knowledge, because like you said, there's so much, to get this sort of knowledge, you really just have to talk to the source. There's so much misinformation out there, and you don't know what you're hearing from who. So kudos to you for making the time to be here. And yeah, I'm looking forward to doing it again. Definitely want to do this again. Thank you so much, Sharika.
You're welcome. Thank you, Jalissa. Jalissa says great information. Thank you both. Loana says great presentation. Orda says well done, guys. We're just so thankful that you guys stuck around. Jackie, hi Jackie. Jackie says thank you. We're just really happy that you guys stuck it through with us, and we look forward to hearing from you, and we look forward to working with you in the near future. So thank you guys for being here, and yeah, we'll talk. All right, bye guys.
Bye-bye.